Students, happy and good morning to you all. Thank God for the new day. I pray that God's grace be upon us and keep us all safe and protected during these difficult times. You all need to be taking care of yourself, purely and perfectly follow the instructions of your dear parents and help them feel more joy in their life, children. Yes, you will do that, I know. Thank you. I greet and welcome you to the class on commercial applications. Please stay focused and grasp the concepts with first class fineness. Make sure that you write down the additional points which I stress and repeat for easy understanding and good performance. Thank you. Thank you for being very smart and brilliant children. Yes, your great work will result in intangible and beneficial results, children. Don't worry about it. I want you all to be great listeners and learn all that is taught here. And please follow my teachings carefully, children. You can listen to my teachings again and again so that you become best of all. The learning objectives for today's class are as follows, children. We are into the chapter of GAP. You are continuing. Under that, we have seen GAP. GAP is nothing but generally accepted accounting principles. Generally accepted accounting principles. Under that, we have seen introduction. Under introduction, I gave you the introduction of GAP from accounting. And we also remember the great father of accounting education, Luca Pacioli. And from there, we started to understand the meaning and purpose of accounting, which is very well given by the definitions according to ICPA. ICPA stands for American Institute of Certified Public Accountants, and we have seen the meaning of generally accepted accounting principles. Yes, they are very important, children. And need and significance of GAP. We have also seen the distinction between accounting and bookkeeping. I've made it very simple and easy for you to understand. There are 5 points, which is important from the examination point of view. And also we have seen accounting cycle and steps in accounting cycle I have given you, children. Please make a note of it. From here, I'm going to start again from steps in accounting cycle. I think this is the point where I stopped in the previous class. I'll quickly summarize the main points for you once again. Please pay attention, children, learn. So what are the 5 steps involved in accounting cycle, children? Yes, I'm going to tell you that. Please pay attention. Steps involved in accounting cycle. First one is transactions. Second one is journal entry. Third one is posting entries into journal ledger. Fourth one is trial balance. And fifth one is preparation of final statements called final accounts. Since we are dealing with non-trading concern, our final accounts will be, we need to study about receipts and payments account, income and expenditure account, and the balance sheet. Balance sheet here, we also call it a statement of affairs because it's a statement, it's not an account. So balance sheet is not an account, it's only a statement with assets and liability. Assets should be equal to liabilities. What is the first step, children, in accounting cycle? Nothing but transactions. Let me summarize it for you. Transactions create database by going through the business events of buying and selling having monetary value. So what is a transaction? Transaction is nothing but a business event of buying and selling having monetary value. Second one is journal entry. What is journal entry? You know, children, you're going to pass an entry depending upon the debit aspect and the credit aspect of each and every transaction. Journal entries are the foundations for all financial recording and reporting. It helps to analyze the financial transaction affecting business. Third one is posting entries into general ledgers. Yes, you're going to classify accounting, sorting out individual transactions into separate accounts. What is posting? Posting is nothing but sorting out individual transactions into separate accounts. Next one is trial balance. Trial balance helps to ensure all the entries in the ledger or books of accounts are properly balanced. If the trial balance doesn't tally, doesn't that means the balances of debit should be equal to the balances of credit. If there is no balance or misbalance, you cannot prepare the final statements. So final accounts showing the results of all the financial activities in a nutshell. Again, I told you, you're going to study about preparing receipts and payments account, preparation of income and expenditure account, and the balance sheet. Here we call balance sheet as statement of affairs. Let me take up the first learning objective and explain them to you. So what is the first learning objective? Accounting conventions and concepts. So there are 5 accounting conventions, concepts, assumptions, and 6 principles. So we'll quickly go through them and I'll tell you the 5 accounting concepts, children. We got business entity concept, going concern concept, double entry, accounting period concept, and money measurement concept. Five. So we'll take up the first one, accounting conventions, concepts, and assumptions. Students, stay focused and learn. What is convention? Convention is nothing but usual ways of doing things, children. In accounting language, it is a way of recording business transaction. Convention is nothing but ways of recording business transactions, nothing but procedures or principles which is generally accepted. So There are synonyms, conventions, concepts, and assumptions. What is the first uh, concept, children? Business entity concept. Please pay attention. Business or organization entity concept. So, business organization entity. What is entity, children? Entity is nothing but something that has real existence. So, concept. Concept already told you ways of recording business transactions. It's a usual way of doing things. Business entity concept, also called as, please make a note quickly, entity concept or economic entity concept. What is the other word for business entity concept? Economic entity concept. That means organization, business organization and owners are two separate entities. Once it is registered, once the company is registered and incorporated, this sort of concept arises. Organization is different from owners. Business concern is treated as completely separate entity as distinct from its owners. All accounting activities are centered around the business concern. So you must understand this, children. Business entity is also called as economic entity concept or just entity concept. Now here, business stands apart from the organization as a separate economic unit. So business is separated from owners. Who are owners? Owners are nothing but shareholders. So you've got two parts in organization, children: ownership and management. Management is usually done by board of directors, and owners are shareholders. Then here, what happens now? You must go to the accounting convention now. Under business entity concept, what is the accounting convention? Accounting records must be kept separate from the personal affairs of the owners. You must know. Business unit is a separate entity with its own identity. Yes. What now? What is the type of account we have to do here? Accounting records must be kept separate from the personal affairs of the owners. Transactions are recorded from the viewpoint of their business unit. So you must understand here, children, auditing becomes difficult if the records of the business are intermingled with entities and individuals. So you must keep the business organization separate from individual accounts. So individual account must be differentiated from organization account. For example, children, this is a problem which you have seen in sole trading, partnership, even in corporation business. This kind of problems can arise. So what is business entity? Business entity is nothing but economic entity concept, or organization and owner are two separate entity concept. So organization is different from owners. So accounting must be kept separate from the personal affairs of the owner and the organization. Second one is going concern concept. So what is the main motto given under accounting, children? So you must know what is the main motto under company. Men may come, men may go, but company goes on forever. Men may come, men may go, but companies goes on forever. Children, please make a note here. Going concern. Going concern means once a company starts, is incorporated, registered, it will continue. So here you must understand, death, insolvency, all those problems will not stop the business from its operations. Company will financially be stable enough to meet the obligations and continue its business for the future. Business concerns will continue its operation for the foreseeable future under normal circumstances for a definite period of time, and they keep functioning continuously. This is what is mean of going concern. Going concern is nothing but functioning continuously. Company functioning continuously is called as going concern concept. Here, what happens? This deals with the continuative existence of the business concern. So nothing will stop the business to end easily until otherwise it is uh, illegally going against the Company Act of 1956. So here what happens, please make a note of, children. Company will continue and not liquidate or discontinue due to any reason. What's the meaning of liquidating? Winding up. Discontinue is nothing but dissolution. So it will not get dissolved. It will not come to an end very easily due to any reason. This concept, children, is very important. Please make a note. This concept is very important to shareholders because it assures stability, ability to raise capital and to draw more investors. That is what. So, how to build up the capital? How is capital made up of? Shares. So, you must build up more shareholders so that you can raise the capital and mobilize capital so that you can draw more investors. Accounting of business unit is based on the assumption that concern will be operating for a long period of time, providing continuous record of transactions throughout its existence. Continuously it works. So you must understand here. One more point I can add on, children. Businesses are able to perform accrued or prepaid expenses. So you must also understand two types of business are there: accrued or prepaid. I'm going to explain that when I come to the point again. Children, here What happens? This concept is very important for whom? Shareholders, because it assures stability, ability to raise capital and to draw more investors. So the company will continue and will not liquidate or discontinue due to any reason. Third is duality or double entry concept. Double entry system or double duality. Duality or double entry system. Children, please make a note before I go to this. This is the most fundamental concept, very important concept among the five. Double entry, please make a note quickly. Double entry is an accounting system with two equals and corresponding sides such as debit and credit. So what is double entry? For every debit, there will be equal and opposite credit. What is debit? Debit is nothing but incoming aspect. What is credit? Credit is nothing but outgoing. Cash incoming is debit. Cash outgoing is credit. So what happens? Double entry is an accounting system which has got two equal and corresponding sides such as debits and credits. This concept suggests that every debit has a corresponding and equal credit. So when you see the account A, T account, on the left hand side we have the debit, on the right hand side we have got the credit. I repeat, on the left hand side we have the debit, on the right hand side we have got the credit. So debit must be equal to credit. We are going to take out the balance. So it is of present day bookkeeping, children. Present day accounting, present day bookkeeping depends upon double entry system. Every business transactions consists of two actions: getting the benefit, that is debit, and giving the benefit, that is credit. The receiving account is debited and the giving account is credited. Every debit has equal credit. Please make a note of, children. I will tell you some more points for you to make understand this concept easily. The main principle is for every debit there is a corresponding credit for an equal amount of money. So debit must be equal to credit. In double entry system, please make a note of this, children. In double entry system, all transaction amounts entered on the debit side must be equal to the amount entered on the credit side. Once again, I repeat, in double entry system, all transactions entered on the debit side must be equal to the amount entered on the credit side. Another point also you can add on, children, which you should know: every financial transaction has got equal and opposite effects in at least two different accounts. So every transaction has got a debit aspect in it and the credit aspect in it. When you do the journal entry, you'll understand this very correctly. You're all done. One or two with me. You know every debit has got an equal and opposite credit of the same amount. That also you know, children. Yes. Then the total assets of business are equal to the total liability. What are assets? Assets are those things which you own. Liabilities are those things which you owe. So there's a difference between owning and owing. So there's a small equation, children, which you should know. Assets are equal to liabilities plus capital. Capital is nothing but equity. What is equity? What is capital? Equity is nothing but value of shares issued by the company. Equity is nothing but value of shares. So how is the capital built? Built on shares. The more number of shares with more denomination, more value, raises up the capital. Again, capital is, this is a simple formula. Capital is equal to assets minus liability. So what is the capital? Assets minus liability. And what is asset? Asset is nothing but liabilities plus capital. This is asset. So double entry system is more important than, because in double entry system, all transaction amounts entered on the debit side must be equal to the amount entered on the credit side. That means for every debit there's an equal and opposite credit. That is double entry system. And every accounting in today's business world is done on double entry system. Next concept or next assumption convention is monetary or money measurement concept. So, children, you can talk so much about the word money. Every recorded transaction, children, is measured in terms of money, local currency. You all know that, yes. Money is a medium of exchange and a basic unit of accounting. Without money, you cannot understand accounting. It provides uniform basis to measure the value of different goods and services. Yes, please note down, children. Money is a unit of measurement. Money changes purchasing power. More money, good purchasing power. Less money, less purchasing power. So money is a unit of measurement. And also, I can talk more about money, children. Money is also the medium of exchange. It is a unit of account, store of value, etc. Store of value also. If you have more money, you got more value. So transactions which are of money value are included in the accounting records. Nothing else. So you cannot have kind and other kind of non-monetary transactions recorded in the books of accounts. Different transactions of different units are brought to the common unit by showing what is a common unit, that local currency. USD you don't take. That means US dollars, that also has to be converted and then recorded. Common unit by showing all transactions in money value. So Indian rupee. Money is a yardstick, it's an index of the unit to measure the different transactions of the company. Please make a note, your children. Recording only the transactions which is expressed in terms of money is important. We cannot understand accounts otherwise. For example, I'll tell you, children, employee skills and talents, working conditions, all this kind of things, extra things cannot be accounted, cannot be recorded because doesn't have money value. So here also, this concept prevents business owners from determining their values for items. You must also help the children. Please note down this, children. So this concept is very important for the owners from determining their own values for items. So what happens now? The value of company's brand. All this is very so. Money measurement concept talks about that every recorded transaction is measured in terms of money, local currency. The fifth one, accounting period concept. The name itself will tell you. Period concept. What is period concept? Is nothing but life of business, segregated into equal amounts of time, called as accounting period. So what is a period concept? Nothing but life of business segregated into equal parts of time period, called as accounting period. Here, what happens, children? Time frame for which business prepares its financial statements and reports. There's a time frame. The business transactions of company is put into periodic intervals of time, usually 1 year. 1 year is 1st of April to 31st of March. Please, children, please make a note. Not the calendar year. We don't go by the calendar year. We go by the financial year. What is the financial year? Say 1st of April to 31st of March. It is a period for which a business unit prepares its accounts. Also, you must understand this. It is a period for which a business unit prepares its accounts. So, in order to report its financial position, children, to the external users, they must follow the period concept, accounting period concepts. Yes, there's a time frame for preparing accounts, financial statements, and reports also. What is the time period required to prepare? Usually 1 year, financial year. What do the financial years say? 1st of April to 31st of March. Accounts can be prepared even for shorter periods of yearly, quarter yearly. You can prepare for 3 months, 6 months, or 12 months period. Yes, for internal reporting purposes and also helps comparison of financial statements of different periods. Yes, you can prepare a but one full year's account will give you the exact status of the financial status of the company. Yes, otherwise you can't understand it fully, completely. There's uniformity and consistency in accounting treatment for profit ascertainment, finding out calculation of profit, and assets valuation. Assets valuation is very important at the time of liquidation time, dissolution time, children, because you have to settle down all the claims of the creditors, all liabilities you must settle, and see that you are out of any debts and dues. Time period helps in proper matching of revenue expenses to achieve the objectives of the accounting. Here what happens, children, may please make a note. Accounting here is also called as accounting and reporting time period. So what is the other word for accounting year? What is accounting year? Start from 1st of April to 31st of March. So there are 5 concepts, children, assumptions, and which is important for you. I've given only 5, children. That's enough for you. Understanding, conventions, concept, and assumptions. What are the 5 things now? Again, I'll tell you. Business entity concept, where organization and owners are two separate entities. Then we're going concern concept. It goes according to the motto of joint stock company. Men may come, men may go, but the company goes on forever. Company is financially stable, children, enough to meet the obligations and continue its business for future. Continue. Company will continue and not liquidate or discontinue due to any reason. Third one is duality, double entry concept. It is the most fundamental concept, children, where two equal and two corresponding sides such as debit and credit is always present. Every transaction has got 2 aspects. That is the getting benefit aspect and giving benefit. Getting benefit is debit and giving benefit is credit. What comes in? Debit. What goes out? Credit. So, in double entry system, children, all transaction amounts entered on the debit side must be equal to the amount entered on the credit side. To prepare trial balance, this is very important. The balances of credit should be properly balanced to the balances of debits. So you got 2 formulas given to the children. Assets is equal to liabilities plus capital. Capital is also called as equity. Equity is nothing but value of shares issued by a company, and capital is equal to assets minus liability. Then you have monetary or money measurement concept. Money is a medium of exchange, money is a medium of unit of accounting, and money is a unit store of value. So you must understand this, children. Money should be converted into local currency. As a unit of measurement, money changes purchasing power also. So we are going to record only those transactions which is expressed in terms of money. Other than that, we are not going to. This concept prevents the business owners from determining their own values for items. That's very important. So please make a note here. This concept prevents the business owners from determining their own values, just like that for their item. For example, the value of company's brand that depends upon the money measurement concept. Yes. Then accounting period concept. Accounting period is nothing but life of business. That is nothing but parts of time period. So accounting period can be 3 months time, 6 months time, 12 months time. If it's for 1 year, we get a proper accounting status of the company. To report its financial position to the external users, you must have one financial year. We don't go by calendar year, we go by financial year, not fiscal year. What does financial year say? 1st of April to 31st of March, even for taxation. Here, accounting period, accounting year is also called as accounting or reporting time period. So we've got 5 units, 5 concepts, children. Then we move on to the next one, important accounting principles. I'm going to list out the important accounting principles, children, to you. So you must understand what are the important accounting principles here, children. Please make a note. Historical cost principle, yes. Matching principle. Then we have materiality principle, consistency principle, and conservatism. What are the 5 things, children? Historical principle, matching principle, materiality principle, consistency, and conservatism. Students, important principles. Principles are nothing but guidelines, which you should know. Historical principle, matching principle, and we have material principle. You have consistency and conservatism. Children, going to time slot. I think we need to close the session, children. I wish you all and pray that you all stay safe, protected, and motivated. God bless us. Have a blessed day, children. Thank you. Please remember to have a study routine and block all distractions and study well, children. Please. Thank you. Thank you.